Okay, so this is the wrap up for the live market open on Friday the 13th. It's the last day of the week, and we have important figures to close the week with the bang. Let's look at what we had so far. Mario Draghi, president of the ECB, erased doubts of no action from the ECB in December and weighed on the euro yesterday. We had mixed figures from the United States, another weakening of oil prices because of more inventories, no action from German and French GDP, and lots of Fed speak, and that was the main market mover. So bullish Bullard said it's time to end extreme policy. Evans was relatively dovish. He wants to see inflation first. Lacker was relatively hawkish. Dudley was cautious. Fisher was more hawkish, saw transitory effects in the US dollar and oil prices. And most importantly, everybody stood his ground. And most importantly, Yellen did not say anything. Okay, so markets expected some acknowledgement, some hawkishness from Janet Yellen. She just didn't talk on this topic. So the US dollar weakened, but all in all, the Fed, in my opinion, is on course for a hike in December. We've seen higher implied probabilities for a rate hike in December, closer to 70% from 67% yesterday. Today, we had a few GDP figures from, and we have a few more from the old continent. No surprises. Main event is US retail sales. We had many disappointments from US retail sales in the past few months, including a small rise last time in headline retail sales and another fall in core retail sales. Now markets are expecting a hike, but a rise in retail sales. That's because consumption is such an important part of the US economy. I'm not sure that will happen. We had so many disappointments, and the Fed was maybe too cautious. I think there's no clear consensus. It's really open. At the same time, we have PPI, Producer Price Index. It will play second fiddle to US retail sales. Last but not least, we have, I have a mistake here with the time. Last but not least, we have pre-GMT US consumer confidence from the University of Michigan, and that is expected to show a small rise to 91.5%. It's supposed to predict the retail sales for November, the direction of the US economy. Also is of importance, and of course, if it goes in the same direction of retail sales, it'll make the moves stronger. So that's the big events for today. If we quick look at the charts, euro dollar is a bit falling within the range. All in all, sorry, 107.60 at the moment, 107.90, 108.30. Levels to watch on the downside, 107.05 and 106.60. Pound dollar relatively resilient in high range, 152 to 152.50. Dollar yen grinding lower, making this trend line move trending lower, 122.75. 122 is strong support, 123.60 strong resistance. Dollar CAD suffering from oil prices, but looking a bit better. Canadian dollar, 134.60, very strong resistance. 132 immediate support, 132.40 immediate support, 131 another support line. Aussie dollar still holding its high ground after the strong jobs report. 71.10, 70.60, and 70 are support lines. 72, 72.80 are resistance lines. Kiwi well within range, 65.30, 65 and 65.70 are resistance lines. So these are the main pairs, the main events. It's the last day of the week. We had lots of action yesterday. I believe we'll have fireworks today also with retail sales and with the consumer confidence, and of course, last minute scrambling to end the week.